Hey everyone, this is Dean with DCA Crypto. Got your weekly crypto YouTuber update. I'd appreciate if you subscribe to my channel, smash that like button, and let's jump into it. Alright, today we're going to be doing your weekly crypto YouTuber update. This is my weekly update that I try to get out to you guys to let you guys know which videos I've picked for the week of other crypto YouTubers out there that I think have some useful information for you guys to watch their videos for this week. So let's jump into it here. First of all, I'm just going to go over Bitcoin's price quick. After we crashed down to like 53,500, we're back up over 58,000 as of this recording. So Bitcoin's showing a good recovery here. And hopefully we'll stay up above this level. There is a fair chance that we're going to come back down and crash lower than this, but we'll have to see if that actually happens or not. It might have been just a shakeout and we're going to continue to move up, or we may end up going lower here. So we'll have to wait and see what happens with this. Either way, I still think we're going to probably get a big bull run towards the end of this year and into 2025. That's not financial advice, guys. I'm just going off from what's happened historically with Bitcoin. Look at the Bitcoin fear, or actually crypto fear and greed index here. We're now at 26 for fear. So we're starting to break down almost to this red zone here, which is a good sign that, if we get down in this red zone, the capitulation probably won't be hopefully too much longer after that. So we'll have to see if we get that or not. Just all going to depend here. So the first video I'm going to jump into here, this is by No BS Crypto. Kyron's got some good information in this, so I'll play this for you quickly.
Rightfully so, you're probably panicking a little bit right now, and you've asked yourself the question, is it time to finally sell my crypto? Are we in a bull run, bear market? What the hell's happening, and what do I do? Okay, I know that you're probably panicking, okay, because I think a week ago and prior, we had people panicking, but I never really had the clear indicator, personally speaking, that, people were really considering selling their altcoins and taking a bit of a loss and getting out of the market, until I had a few people very close to me reach out to me wanting to get on a call with me saying, hey, I need help, I'm thinking about selling. Now, to me, that's a very clear indicator that it's not just these people, but of course they can rely on myself, but it's other people who don't have someone they can easily reach out to that spends all day, every day in the market, right? They're potentially wanting to exit. So in this video, we are actually going to figure out whether it is a good time to possibly think about de-risking or getting out of the market, or whether we should just weather the storm for potentially much greener days. So do not forget, if you find yourself enjoying this or maybe relaxing box and intentionally get, particularly crypto, decision, non-financial advice, of course. Alright, so for us to start this video, I'm going to have to tell you about a little thing I've been saying for a while now, and that's when it comes to the market, particularly crypto, okay, the whales make their money when the prices are low. When the prices are low and they can push the market down, whether they intentionally sell, whether they, put a whole bunch of FUD articles up online to cause retail to panic sell. There's a whole multitude of things, and normally if some of these things are kind of compounded together all at once, they will try to force the market down, like we've seen recently with this whole Mt. Gox and Germany sell-off of Bitcoin, whatever it might be. The whales can propagate it even more and sell a bit more to push it down. A few FUD articles here and there always goes the way. And then what they end up doing is pushing the market into a place where there is maximum fear, meaning that you decide to sell. Now, like I said many days ago and weeks ago, the only way this works for them, the only way they can continue to accumulate large amount of their favorite tokens to make their higher multiples, is by pushing us into a state of pure fear, pure panic. This doesn't happen based on the slight amount of fear, right? When this fear and greed index is probably in the 30s, 40s, there's a little bit of fear there, okay, but it's not enough for you to want to panic sell, okay? Literally, 18 days ago, okay, here, the fear and greed index was 74. People were a little bit worried, okay, but ultimately, they all thought and agreed the bull run's still going to happen, so hey, it is what it is, right? But now it's at 26. And the mood has completely shifted to, I'm panicking, I need to exit the market, or they're considering it. I've noticed a lot of people are very agitated right now in my private community. Again, people are agitated, people are angry, people are questioning things. Okay, not towards the private community per se, but towards the market, okay? It's anxiety fueled market right now.
So Kyron's got some good points in this video. You guys should take a look at this. But the market, like I've said many times before, is psychologically driven. There is a reason there's that chart for the psychology of a market cycle, is because it is all a mind game, and that's how they play these mind games with you to fool you out of your money. by scaring the crap out of you. And you got to have the opposite mindset, in my personal opinion. You know, when I see these prices crash like this, I buy more and I add it to my portfolio. And then when we're moving up in the price and everybody's happy and everybody says, don't sell yet, don't sell yet, it's going to keep going higher, that's when I start selling, because I know that, you know, we're probably getting to a point where I need to start taking some profits out, because we're probably going to have a good correction at some point, whether it's days later, weeks later, or months later. I start taking some profits out on some of my coins that have pumped a good amount. But check out Kyron's video. He's got some great information in here, and he's absolutely right. A lot of people are kind of upset right now, a little bit worried about the market and whether we're going to actually continue on into a bull run yet. And it's a normal feeling based off from, you know, normal human fear based off of, you know, you're losing money. So keep that in mind. The next video here is by a channel I've never talked about before on my channel, Blockswork Macro, and he's doing an interview here with Raul Paul. I want to play just a little bit of this, guys, but I think you should watch this video. It's almost an hour long. It's some really good information in here from Raul about this entire liquidity cycle, the crypto cycles, and why he thinks that the bull run hasn't even started yet, and why he thinks we're going to go into a major bull run, and why he thinks long term these good solid crypto projects are going to continually go up in price over the long term. And that's why I've suggested now to have like a short-term portfolio for cashing out this bull run, and also a long-term portfolio to hold on to for the long term, just in case, you know, we don't get a huge correction after this bull run. And even if we do, likely some of these bigger cap coins that are safer, like Bitcoin, Solana, Ethereum, some of those probably going to do very well long term. So keep that in mind.
I'd love to just hear a bit about, you know, where we're at and where you view us in terms of this liquidity cycle from a pretty global macro view, and then we can go into some of the specifics of that's implications on, you know, crypto markets and what you're seeing there. But we'd love to just get a bit of a state of play of where you think we're at right now.
Yeah, so as I've been talking about for a while, I think we're in that transition from macro crypto spring into macro crypto summer. Now, people confuse it with the actual season itself. I just saw that on Twitter. I'm like, no. It's because it breaks down to 4 periods of the liquidity cycle that drives assets. So the transition here is usually when the forces are still disinflationary and growth is slow to picking up. That is like macro utopia. Why? Because that tends to push the central banks into adding liquidity and the governments to adding liquidity. It also happens to be, this everything code cycle is also about the election cycle. And guess what politicians do at this time as well? They want to give candy to the kids. So they're stimulating as well and tend to stimulate into the following year as well. So that particular juncture of the macro starting to pick up, the ISM survey is still below 50. So it's still sluggish. The forward-looking indicators are all very positive and liquidity has been positive for a while. That pickup, if you think of it, we've had a Wall Street recovery, which is liquidity. Main Street recovery is yet to happen. Main Street is when earnings go up, and all of our earnings go up, and there's a bit more money around. That's when the flows from all of these earnings start going into markets as well. So it's not just liquidity and debasement driving things, it gets driven by actual investment money, which has been actually quite lacking in many respects. So that's typical of the crypto summer. So the crypto summer starts around now. It also forms the basis of the banana zone. And that's when things start to get really crazy. If we go back and look at all of these, since about 2008, they've all done roughly the same thing, which is presidential election cycle. It kind of has a sell-off into the summer, then it tends to accelerate sideways over the election because everyone doesn't know what it means, and then it's all over, markets rip. Whatever the outcome, a shock, you know, expected result doesn't matter. And so that election cycle has been very prevalent both in equities and in crypto. So that's where we are in the cycle now. So we're just in that zone of, you know, we've got this beautiful chart pattern that is just consolidating. The stuff that has less network traction or network adoption has fallen significantly, but we're starting to see the recovery. So I think it's only a matter of time now before we start to see the next move. And
so you guys can watch this video. It's got some really good information about the different cycles with liquidity and how that affects the crypto markets and how it affects the bull run. But he's right. You know, when typically after the halving towards the end of the year, we get a little bit of a pump. and then things kind of taper off with the election to see how the election results go. And then usually after the election, things rip. Usually, like in 2021, alt season really ripped in that spring of 2021 up until about March or April. Things were just really ripping in crypto after the election cycle was complete and Biden was in office. Things just really ripped into the crypto market and things started to take off. And we had a big sell-off that summer as well. We had a huge correction on Bitcoin and crypto, and that was more painful than this one we just had recently here. It was I think a 35-40% correction or more. It was absolutely painful correction. I'd have to look at the actual numbers on it, but I remember that it was very painful. So we do get these big corrections in the cycle, and they do happen. So check out this video, guys. It's an interesting video, a lot of good information in there, and I think you guys should take a look at it. So this video here is about from Altcoin Daily. It's about the new Solana ETF and how that could affect Solana's price. He's also got some news in this video about Chainlink and Polkadot, but I think this video has some great information about the Solana ETF and the potential price effect that it could have on Solana in the future. So I'll play a little bit of this and then we can jump into the next video.
Let's start for the altcoin getting an ETF, most likely after Ethereum.
Big elephant in the room here is how regulators would treat Ethereum versus Solana versus Bitcoin. How much concern do you have about the regulatory disapproval of Solana versus how they treat Ethereum?
So we know that Van Eck has filed for a Solana spot ETF. Also, 21 Shares has filed an application, and 3iQ, a company in Canada. BlackRock is expected to apply for a Solana ETF in July, although this has not been confirmed yet. But with Van Eck, for example, having applications for both Ethereum and Solana, the firm's Matthew Siegel says decisions on both come down to SEC's Gary Gensler.
Well, one thing that Gary Gensler said at your conference last week, which was not in that soundbite, it was that the Ethereum applications are going smoothly. And this might be the only time in 3 years that I've agreed with Gary Gensler about something. But if these products are allowed to trade, then that confirms that Ethereum is a commodity, and the same thing will be true of Solana as well. So, there's some focus that there's no regulated futures market for Solana, and that might be holding back the ETF. We think that is a Gensler psyop. He has created that condition since taking power. There are a number of ETFs that trade where the futures market is irrelevant to the price formation. I'm talking about shipping ETFs, uranium ETFs, power ETFs. So with the slight change in the regulatory environment in Washington, we think these will get approved.
So typically, if an asset gets a regulated futures contract,
so you guys can check out this video. He's got some price predictions in there from different like forecasters out there, how it could affect the price of Solana. It's pretty shocking, some of the price predictions that they have out there for Solana if this ETF gets approved. So check this video out, guys, and we'll jump into the next one here. So the last video here is from Crypto Banter, and I know the only thing I don't like about Ran is he kind of shifts from bearish to bullish, bearish to bullish, bearish to bullish, kind of plays on people's minds or emotions with his videos sometimes, and his thumbnails especially. A lot of them are clickbait, but that's how they draw your attention into clicking on the video and watching it. It is what it is. If they don't get people to click on the video, they don't get the views, and then if they don't get the views, they don't get the sponsorships, and it's never-ending cycle. So I try to do the best I can with my thumbnails to make them where they're attractive. People want to click on them without being too clickbaity, but sometimes you got to think of something that'll capture people's attention to click on the thumbnail. So it can be difficult to do and not try to breach that line where you're being clickbaity. But we'll jump into this video here. He does have some great information on this video.
This bull market, even now, is much more extended than the normal crypto cycles. And as Ben Khan said, if we didn't get the ETF and we were just following a normal cycle, we should have been at 42,000 on Bitcoin, and we are now at 57,000. So we're doing amazingly, actually. We're doing absolutely amazingly. I also said to you, look, we haven't had a real correction for 427 days. And so it was time to actually get a correction. We had the correction, and now we're getting what I'm calling a V-shaped recovery. I mean, how nice is this V-shaped recovery? So the other thing that I said to you guys is that there are two things that have happened in the last 24 to 48 hours that have really given me conviction that I'm right here and that we are very firmly in a bull market and that this is nothing to panic about. The first thing that gave me the conviction is the speed of the recovery. Okay, look at that recovery. We were at 53 or 54,000. I did say to you that this happened on the 4th of July. It's 5th of July our time, but it's actually 4th of July USA time. And there were no buyers. The ETFs were closed. The markets were closed. There were no buyers. Remember, the biggest buyer right now driving the markets is the ETF. And what happened here was that they did this while the markets were closed for 4th of July holiday. And even yesterday, which was 5th of July, most people actually didn't go to work because Americans, because they're so rich, because the government just keeps giving them stimulus money and shit like that, because they're so rich, they just take the Friday off. And then so they'll come back on Monday and they'll carry on buying. So that the first thing is the speed of the recovery is giving me hope or telling me that I think I'm right in my conviction. The second thing is this. This is a big thing. The ETFs yesterday were actually under a test because it's the first time since the launch of the ETFs that we've had a correction that is this bad. This is like for us people that have been in Bitcoin for a long time, this is pretty normal, right? But for the ETFs, since the ETFs actually started, they've never seen a situation like this. And if they've never seen a situation like this, this was the test for them. Were they going to panic sell or were they going to buy? That was the big question yesterday. And so what we saw is that yesterday the ETFs actually bought the dip. And that's why I tweeted, I said, look, it's amazing news that in the first real crash since the ETFs bought the ETFs, they actually bought the dip. They didn't panic sell, which was amazing. So if we now got a fast recovery, we got the ETFs actually buying. And I saw this tweet from Ben Cowan where he says, is this the new trend line? It looks exactly like 2019. So look at this fractal of this bull market, and then look at the same fractal of 2019. This was the COVID correction. This was their Black Swan event. And look at this. I mean, it's uncanny how similar these post-halving corrections are. And it does feel like we're getting there. But look, I think that this tweet is very important. The sell-offs end when the sellers run out of coins. I know it sounds obvious, but the key is to ignore where the buyers step in. Now, we did get buyers stepping in, and there could be some selling, because remember that the Mt. Gox coins are not in the market yet. They are still coming to the market, and so there will be some turbulence ahead. That I can tell you, there will be some turbulence ahead. I don't think it's just going to be up a straight line from now. There could be some more turbulence before. But the one thing that I'm actually willing to, I don't want to say put my bottom dollar on, but I do want to say with quite a high level of conviction, I believe that at the end of the year, the price of Bitcoin will be higher.
So check out this video, guys. He does have some good information in here on the technicals, what's going on in the market, and that's why I suggest this video here. And so give it a watch. It's got some good information in there. But these are the 4 videos I picked out for you guys for this week. There's not a whole lot going on in the market as far as good videos out there, because there's a lot of panic in the market. Some YouTubers tend to run away when there's panic in the market and don't keep putting videos out because they don't, either they don't know what to say to their audience or whatever. But I try to be here every day regardless of what's going on in the market. Hopefully you guys stick with me here throughout this cycle. There's going to be some bumps in the road, but hopefully we go into a bull run later at the end of this year and into 2025 and reach our financial freedom goals. But check out these videos, guys. These are the ones I got for you this week. So that's pretty much what I got for this video. Please give this video a like for the YouTube algorithm. If you're not subscribed, hit that subscribe button, and we'll see you on the next video.